Good morning, traders. It's the 18th of January. I am Joe Neighbour from Signal Centre. I hope you're all well. Had a few issues with the streaming yesterday. It was streamed live to YouTube, so if anybody wants to check that out, please feel free to go and do so. But obviously that's yesterday's news. Let's focus on what's happening today and over the past 24 hours. It's been a pretty volatile start to the day, certainly in a few currencies as a result of that Bank of Japan policy meeting that took place yesterday. So going to get stuck into the latest headlines, then we'll go through some charts, then we'll move on to the gun to the head trade and wrap up with the data that's due out for the day ahead. So the latest headlines today. The New York Manufacturing Index slides. Yesterday, we saw the index slump to minus 32.9 for January from a minus 11.2 reading in the previous month. And this was substantially below the consensus forecast of minus 8.7, meaning it was the weakest reading since mid-2020, and also the fifth lowest reading on record. New orders and productions also contracted sharply on the month with smaller declines in unfilled orders. However, companies were slightly more optimistic over the outlook while expecting cost pressures to ease further. We had some German data yesterday as well. The ZEW index conditions improved strongly to 16.9 for January from a previous reading of minus 23.3 in the previous month. And that was substantially above the consensus forecast of minus 15. There was, however, only a small improvement in the current conditions component to minus 58.6 from a previous reading of minus 61.4. The ECB have dampened rate expectations yesterday after the Wall Street Open. There were reports that the ECB was considering a slowdown in the potential pace and extent of interest rate increases. According to sources, the bank is still expected to increase rates by a further 50 basis points at the February meeting, but the bank is then considering smaller increases at the March meeting. Euro loses support following the ECB sources yesterday. We saw the euro dip sharply across the board with losses against all major markets. And there was, however, a bit of buying on dips as risk appetite did hold firm later on in the session. We've had some Canadian inflation data as well. We saw that decline. The headline rate declined to 6.3% for December from 6.8 previously, and slightly below the expectations of 6.4%. And then we come on to the BOJ. As expected, the Bank of Japan held interest rates at minus 0.1%, but also made no further changes to the yield curve control policy, with the ceiling held at 0.5%. GDP forecasts were revised slightly higher, while there was a smaller than expected increase in inflation forecasts. The yen has slid as a result of all of this. We saw a pretty heavy move lower in yen selling. The dollar surged to highs just above 131.50 against the yen before retreating to around 130.75, with the decision also helping to underpin risk appetite. So they've held firm on their decision. We've seen the BOJ and the ECB reports both help underpin risk appetite, and equities secured net gains in Asia. This morning, prior to the market opening at 7 a.m., we had the headline UK inflation rate, which declined to 10.5% from 10.7% previously, although this was just in line with market expectations, and the core rate held at 6.3%, which was marginally above expectations. So let's get to some charts then, shall we? We'll start off with cryptocurrencies. Cryptocurrencies as we often do. I'm going to start off with the Crypto 10 index today. This is the top 10 global cryptocurrencies by market cap. So this gives us a bit of an indication about what the whole cryptocurrency space is doing, gives us some confidence about looking at other cryptocurrencies based on what this chart is doing. So at the moment, it is still trading in a downtrend, as we can see here highlighted by this blue line. We've also got a couple of resistance levels here at 7228 and 7349, which unless we can overcome, I still think there is potential for some downward pressure on the cryptocurrencies, even though we have seen a very, very strong move since the start of 2023. So still looking, I guess reasonably bullish, but there is some pretty stiff resistance above that we need to overcome. And this chart really is quite close to replicating what we're seeing on Bitcoin as well. We can see here that prices are stalling at this 2155 level. 21555 level. Yesterday we posted a doji candle having tapped that level, but then closing below it. So still pretty stiff resistance there that we need to overcome. If we can see a close above this on a closing basis, then it does open up the upside for Bitcoin and we can start looking for higher levels. The next level I've got on the chart is up here at 25,322. So obviously that would be very welcome for crypto enthusiasts, but still a bit of work to do here on the daily chart. If we fail to get above this level, then it may be that we see some sort of pullback, maybe into this support zone down here around 18,150, before maybe then having another go at breaking higher, and at which point we confirm a really nice looking bottom pattern, which will, I think, will give us even more confidence for higher prices over the medium to long term. So let's take a look at commodities now, and let's start off with gold. We can see here that prices stalled a touch over the last couple of sessions. We did see a bit of a pullback to retest the underside of a 61.8% fib level. Not sure how relevant that now is. I guess my focus is more now this 78.6% fib level on the upside, which also corresponds with a resistance at 1971. So at the moment, still trending higher, as we can see. Pretty strong indeed, providing it continues to hold above that short-term trend line. Then I think there are expectations that we can continue to head to the upside. Of course, this is going to be linked to the US dollar, which we'll come on to in a moment and get a picture about where that's potentially heading as well. Let's take a look at silver. That continues to bump up against resistance at 24.30, struggling to overcome that. Above that, we've got this 78.6% fib level and the measured move target of this bottom pattern that we completed back here in November. So it'd be interesting to see if we get any kind of reaction at that level. Yeah, be interesting. I guess at the moment it's just pretty choppy, pretty range bound, so no real clear indication about where that's heading at the moment. Short-term trend, as we know, is moving higher. So provided that we continue to see prices remain above this, then the chances are we will continue to grind higher on silver. Let's take a look at oil. This continues to trade within this bearish channel, although yesterday we did see a close above this local resistance at 86.05. That's on Brent. So that offers some hope that we may see higher prices, potentially forming some sort of short-term bottom here with the move above that resistance yesterday. Still need to get above this downtrend at resistance level. And if we can, then that may see higher oil prices in the short term. If we take a look at crude, again, potentially in the process of forming some sort of bottom here. We need to see a little bit more from this. We need to get above this 81.14 level and see a real firm break above that. If we can, then it's likely we're going to see a break out of this bearish channel as well, and then we can maybe start looking for higher prices. But that's maybe looking a little bit more constructive following the move low that we've seen in recent weeks. Let's take a look now at natural gas. That continues to move lower, down quite considerably today, down by 3.65% as things stand, trying to take out these previous swing lows that we posted on the 13th of January. We've got a target down here at around 285, which is the measured move of this large head and shoulders top. So still looking for lower prices on this, and I think any opportunities or any rallies are likely to provide opportunities to sell. Let's take a look now at copper to round up the commodities. That continues to move higher. Talked yesterday about maybe a chance of a pullback, but nothing happening there. We did see a pullback early on in the session, but then we closed higher on the session, and again moving higher today, up by 1% as things stand. So that's looking pretty strong indeed. We can take a look at maybe some fib levels to target based on this previous swing high that we saw in March. We've got a 61.8% fib level coming up pretty close. At 4.34, so we may get some reaction at that level, and also there'll be some levels in here following the break of this bearish flag. So yeah, maybe approaching some resistance levels soon on copper. Okay, let's take a look at currencies. Get your requests in if there's anything you want us to look at, or me to look at, sorry. I've got Euro, GBP and Sterling Yen, which we'll come on to. Let's start off with the dollar index though. We can see here that prices yesterday stalled. We posted a bit of a doji candle, again at this 50% Fibonacci retracement level, which seems to be doing a pretty good job of holding support. So while that continues to be the case, there is maybe an argument that we could see some sort of mild correction higher to around 103.36. If we look at price action today, we can see that prices attempted to move higher early on in the session, but are now moving back lower, down by 0.08% as things stand. So be interesting to see if we can get a retest of these lows that we posted last Friday. the low being on that 101.77. So that's the key level to watch. If we do indeed go below that level and close below it on a daily basis, then I think we continue to grind lower towards this 61.8% fib level at 99.17. But we do need to be mindful of the fact that we've got the round number of 100 to contend with on the way down as well. So that may provide some psychological support in the short term. Okay, let's take a look at Euro US dollar. We can see that prices continue to grind higher here following the break of the bullish flag. Over the last 3 sessions, we have seen a bit of weakness as prices continue to struggle to overcome resistance that's formed at around 108.69. Attempting to move higher today and engulf all of the losses that we posted yesterday. Still very early in the session. Above that, we've got a 50% fib level, which comes in at 109.42. So that may provide some short-term resistance that we can target on the upside as well. Let's take a look at cable before we get stuck into these requests. So cable yesterday moved higher. Decent session from sterling. Continues to move higher following the break of this pennant or bullish flag. Still needs to overcome these previous highs that we posted back in mid-December, coming in at 124.30. Looks as though we're trying to grind higher towards that level. Expecting to see some resistance there as we've seen previously. So if you are long of cable, maybe time to consider trimming some profits into that zone. But of course, if we do get a break of that, then maybe we're confirming a really large bottom pattern here. This being maybe a left shoulder, this being a head, and then this being a right shoulder, and we can start looking for much bigger gains over the longer term. Let's take a look now at some of these requests. So obviously they seem to be quite yen dominant, given that we've seen some pretty significant moves in the Japanese yen. I'm actually going to start with euro sterling because that's been requested by Mark. And this is quite interesting, actually. This is one that I flagged up as a potential for looking to trade on the short side. So we can see here on the daily chart on euro sterling that prices have been trapped within this range for a period of time. And we can see that on a number of occasions throughout this phase here, between the 27th of December, really up until yesterday, prices have been contained by this 88.66 level, and prices have failed to get above it. We did see some hope of a breakout on the 12th, but then we engulfed those gains on the next session. And then yesterday we saw a pretty swift move lower, which was created by these ECB commentaries talking about raising interest rates by 50 basis points at the next meeting. So that's a pretty significant candle there that we posted yesterday. So for me, I'd be looking to sell into a retest of around 88.46 just to try and really improve my risk reward on this. So if we can get filled around that level with a stop loss somewhere around there above those recent highs that we've seen, giving us a little bit of clearance room, and then targeting a move back down to the lower end of that channel, the risk reward is very, very nice on that indeed. And that's on a daily chart. So that's around about 4.6 to 1. If we can get a fill on that level. So looking for a retest higher into that kind of naked level that we created yesterday. Following that swift move lower, we do often get retests of these levels, and they can provide the sort of best risk reward opportunities if you're patient enough to wait for them. So it looks as though we're going to get lower prices on that for me. Of course, if we do start taking out these previous highs, then that would invalidate that theory, and then we have a completion of a sort of a range on the upside and can maybe start looking for higher prices. But for me, I'm looking to for opportunities to sell that over the coming days. Let's take a look at some of these yen pairs there. Let's start off with sterling yen, a couple of you looking at that. So we've seen obviously a pretty swift move higher in this over the past few hours as a result of the Bank of Japan keeping interest rates as they are and no further changes to the yield curve control. And we've rallied into a resistance level here, similar to what we've just seen on euro sterling. When we get these big impulsive moves lower, I tend to like to try and sell at retests of the sort of level prior to that. And we've rallied into that today. We have had a little bit of an overshoot, attempted to take out some of these levels at 161.24, but failed. So for me, that's a pretty good area or zone to be considering getting fresh short positions on, obviously giving yourself enough clearance as a stop loss to be able to trade that. But obviously we've got some range bound price action here. In the short term, we are towards the upper end of that range that's established itself. So maybe some opportunities for a short trade. Let's take a look at this on the intradays and see if there's anything here that looks of interest. I like to use the volume control, the point of controls on the intraday charts to give me an indication about where most of the trade's taking place. Now, this is a periodic volume profile, and it just takes a look at the last 20 days. So we can see here that the volume that's taken place over the last 20 days, most of the trades have taken place where this red line indicates. This is the volume point of control, and it's pretty much at where the prices are trading at the moment. If we take a look at the short-term price action, we can also see in blue here that we've got a 78.6% fib level as well. So the rally into this level is providing some resistance. So for me, based on the move higher that we've seen and taking into account what we've seen on the daily chart, this could be a reasonable area to consider getting some shorts on, given that we've seen a pretty swift rally higher. Now, where you place your stop loss, you've got a couple of options. You can go above today's high, or if you want a bit more safety, you can go above the high that we posted previously back in December. So for me, the risk reward looks pretty good on that on the short side. Let's take a look now at Aussie dollar, because we've had a request to take a look at that. Let's look at the daily to start with, give us an indication of what's happening here. Really strong price action here at the moment. We completed a head and shoulders bottom pattern back here in November, and since then prices have continued to grind higher. I had a resistance level drawn on at 69.16, which has failed to provide any kind of resistance. We also had a 50% fib level there as well. Let's take a look and see if the 61% is coming up close by, and we can see that it is. So I've also targeting this level potentially as an area to consider getting short. That's at 70.85, pretty much in line with the 61.8% fib level of the major move here that started moving lower back in April. So it's had a pretty strong rally higher. I'm targeting this kind of area to maybe consider lightening up if you've got any long positions here, or maybe considering some speculative short trades. So that's my take on Aussie dollar. So there's a couple of requests there. Let's take a look at some of the other yen markets as well, because they're quite interesting. So this is Aussie yen, and this is obviously a large head and shoulders top pattern that we completed here on this market back on this massive move low that we posted in late December. We saw then a retest of the neckline, which prevented prices from moving higher. We're back at that neckline again, so potential for some interesting short trades again into the neckline of this head and shoulders top pattern, suggesting maybe that the move could fail into here. And I think, again, from a risk reward perspective, you're selling around these levels, depending on where you want to place your stop. Of course, you could go above today's highs if you want to be ultra aggressive, but if you want a bit more safety, then maybe you could be looking for levels a little bit higher up. But the ultimate target of this head and shoulders top pattern suggests that prices could eventually get down to this kind of region, which is at 83.07. That's a measurement from the head to the neckline projected lower, and that provides risk reward of around 4.66 today. So that looks quite interesting for me as well. Okay, unless there's any other FX requests, I will move on now to the indices. If anybody wants to post them up, I can come back to FX markets or any other markets that you guys are interested in seeing. So to start off with European stocks, this is the Euro Stoxx 50, not the broadest index in Europe. The SXXP is the Stoxx 600, so that's obviously a much broader index when it comes to looking at European stocks as a whole. We can see here that prices continue to grind higher. I've got an arrow drawn on here to indicate that there may be some sort of pullback at some point to retest this newly formed support. Looks like we've completed some sort of bottom pattern. But prices at the moment continuing to grind higher, obviously being supported by this overnight news that we've seen from the BOJ and also the ECB continuing to see some decent risk appetite as a result. Let's look at the DAX 40. Again, continuing to grind higher. I've got a band or an area of support drawn on here, which prices may pull back to at some point for a retest before a more sustained move higher. But again, looks as though we've got an interesting looking bottom pattern. We are coming close to a 78.6% fib level at 15,328. So it'd be interesting to see if we get any reaction, if we can indeed get to that level. Let's take a look at the FTSE 100. This continues to grind higher, coming ever so close now to this 7903 level. This is the previous all-time high on the FTSE 100. If we scroll back to the left-hand side, we can see the markets tapped this level back in May 2018. So we're making a pretty good go at getting to that level. There are some indications that this market is overbought and that the sentiment is a little bit extreme at the moment. We posted a doji candle yesterday, which highlights a little bit of indecision. I think now that we've come so close to this level, the chances are we are going to give this a bit of a retest. Obviously, if we can break above it, then we're expecting to see higher prices and we're into sort of blue sky territory with the FTSE 100. However, given the severity of this move on the upside, I would prefer to see some sort of pullback to test this newly formed support before I want to commit too much fresh capital to a market like this. So I'm expecting to see a tap at this level at 7903. But from a preference point of view, given how swift this move higher has been, I'd like to see a consolidation, a pullback into this newly formed support before we can get excited about higher prices. One of the main concerns I've got about indices at the minute is that the US markets just really aren't playing ball. This is the S&P 500, the broadest index in the US, and we're still in a downtrend, as we can see here highlighted by this blue line. Prices continue to try and overcome it, but continue to fail. Yesterday we posted a bit of a reversal candle. We made new highs on the session, but then closed pretty much where we opened. So prices continuing to struggle to break out. If we do get a breakout, then obviously we can start getting a little bit more excited about the prospect for the US market, but we don't have the kind of bottoming formations that we've seen in other European markets. So I really do want to see, the kind of classic technical bottoms that we like to see in markets. Obviously, markets don't always perform in a classical manner. And that's not a problem, but we are still trapped in this downtrend. That is the main concern that I've got, and I really do want to see a breakout before we can get too excited about the global index space, and before we can continue committing more capital to these markets. Let's take a look at NASDAQ. Obviously, this is very popular. It contains all the big tech names that we're very familiar with. We do have earnings season coming up quite soon, so that could provide a bit of a catalyst for a potential move higher. As we saw with the S&P 500, that was kind of right up against that downtrend line, but that's not the case with the NASDAQ. We've still got a bit of space to go before we can even get close to that level. But potentially we are forming some sort of bottom here, maybe a double bottom. To confirm that, we would need to see a breakout above 12,090. And if we can, it's likely we're going to simultaneously take out the downtrend at the same time, and then we can start looking for higher prices. The potential measured move of this potential double bottom comes in at 13,751, but we've still got a lot of work to do before we can really get excited about that. Let's also take a look at the Nikkei as well. This is the obviously main Japanese index following the overnight move. We can see here that prices are attempting to break out of a bit of a resistance zone there at 26,549. We're holding above it at the moment, but rejecting that a little bit at the moment. So it'll be interesting to see if we can hold on to these gains and close above 26,549. If we can, then maybe we'll see a continued move higher. The market, all in all, looks pretty range bound for the time being. That being a kind of upper end of the range, or maybe somewhere around here. It's it's you can take it wherever you want, depending on your thoughts on this. But yeah, it looks a bit range bound at the moment. So potential maybe for a move higher towards 28,653. But I think we need to see more evidence of this holding on a daily basis. At the moment, it seems to be sort of pulling back. It'd be interesting to see if that does indeed provide some support. Okay, let's move on to the gun to the head trade, shall we? This is where, when Steve's here, we both pick trade ideas live on the video. As if we had a gun to our head, what would we trade right now? Each of the ideas that we come up with must have stops and targets. They're all placed at market. The trade ideas will expire at 9 p.m. or when the stops or the targets are hit. In order to manage this, we've got an expert advisor running on the trading account. So we're going through Oanda. We're linked up here via TradingView, which you can see here. Our cash balance at the moment is 1,962.93. We started off with £2,000 at the beginning of the year. So got a bit of catching up to do, but to be honest, being that far away, we're only one winning trade away from being back in profit. As I said, all the risk reward ratios on these trade ideas must be better than 2 to 1. And that is a hard and fast rule that we stick to on all of the trades that we come up with. So now I've got to come up with a trade idea. And let's take a look through. I think currencies was really where my main focus was today. I'm going to take a look at some daily charts just to kind of give me a bit of a bias, and then try and drill down into the intradays to find out where there are potential opportunities. So this is one I may be interested in. This is Aussie yen. We can see here that it's into the neckline of a head and shoulders top. I was also looking at some of the other yen currencies that were particularly stand out for me. Sterling yen was quite interesting. Obviously, we've had a couple of requests on that today as well. We've rallied into that resistance level and failed and having a bit of a pullback. Let's have a look at how it's looking on the intraday. So already seen a pretty chunky reversal on that. Let's have a look at Aussie yen. Okay. So I think I'm going to favour sterling yen, and I'll tell you the reasons why. So Aussie yen is one also that I like, but if we look at the volume point of control here, we can see it's kind of in the middle. So it may be that we get some sort of pullback into that zone, and therefore the risk reward isn't going to be very good for me. But if we look at sterling yen, we can see that the volume point of control is all the way up here. The next kind of protruding volume nodes that we've got are maybe down at this kind of region here, or maybe even down here, which gives me a little bit better opportunity from a risk reward perspective. So let's get a trade on here, shall we? Let's look at selling sterling yen. I mean, ideally the stop loss should be above those levels there, but again, it's not going to give me great risk reward, so I might need to tighten that up a little bit. Let's go with that to give me a 2.34 or 2.45 risk reward ratio on that. So I'm going to sell at market, which is around 159.95. I'm going to have a stop loss at 161.24, and I'm going to look for a pullback to around 156.79. So I'm not sure this is an Awanda price. It isn't, so I'm going to have to redraw that now. So let's get that on. Let's go with that, and that protruding volume node there, it's a bit faded out, but you can kind of make it out around here. So that's at 156.78, giving me a 2.5 risk reward ratio. Let's get a sell on. My take profit is going to be at 156. Nope, that would be wrong. 156.78. My stop loss is going to be at 161.25. I'm going to be risking 1% of our capital, which is going to be equivalent to £19.62. Let's get that on, shall we? Right, so we're on. So the trade has been placed. We're live. That will be resting there. I will also get it published up to our TradingView profile, which is signal_center. So if anybody wants to follow that virtually throughout the trading session, then you can do. Yeah, let's see how that goes. Okay, data for the day ahead. A couple of bits out today that we need to be aware of. Let's take a look. So we've got US producer prices. This is another inflation number that's due out in the US. That's out at 1:30. We've also got US retail sales, which is due out. And then overnight, we've got some jobs numbers from Australia. That will be at 12:30 a.m. UK time. We'll have the labour market report. And then pretty much that's it for the rest of the week. We don't really have anything high impact until next week, when we'll be looking at the global PMI data and also some interest rate decisions from Canada. So that's it for today. Wraps up in under half an hour. Thanks for watching. Glad we got back streaming on TradingView after yesterday's issues I had with the streaming. Thank you for everybody for getting involved in your comments and your requests. Obviously, if you do have any markets that you're looking at, I will do my best to get through them all and give you our thoughts and opinions on those. Have a great day, everybody. Best of luck with your trading, and I will see you in the morning. Have a great day. Bye-bye.